guys, in this video, we're going to talk about GameStop. Now, we have to talk about GameStop because it had a nice move today, around a $52 move, up around $20-ish in after hours. That's putting us right at this 260 mark, which is our 50% fib retrace from back in January. We were harping on this 185 level yesterday, obviously broke that, and then today, gap up, and then just went, and then basically made a beeline straight to that 50% fib retracing. Now, going forward, what's going to be our levels? Well, obviously 300, 200. Let's just keep it simple. Nothing really fancy in here. You have, by this Friday, you have expected move around $68-ish. Your IV is around 400%. So your IV is not as high as it was back here, but it's still pretty high in there. And it's all going to depend on, do people actually care that this is overbought, right? Basically, since March, I mean, you look, March, just straight green, straight up. So are people going to care if it's overbought or not? I'm not sure, especially when it's all on hype and volatility like this. I'm not so sure. And on the option side of things, we have to talk about this. So 10 times the expected move, right? So we're at like 60 bucks right now, trading 200, 10 times the expected move. So $600 out, 800 calls. That's as far out as you can go for this weeklies, for the weekly expiration. You had more volume on your 800 call contracts than you did for the 250s, which was basically at the money and now in the money. This is mind-boggling to me. I don't get that. Who's ever selling those, who's ever writing those calls up there, just those naked calls at 800, I mean, more power to you. You're getting some decent premium. I don't think GameStop will move 10 times the expected move in 3 days. So I mean, who's ever's got those naked calls up there, just selling them and just collecting that premium. I mean, that's good for you. Good for you. If you're trying to do that on the put side, you'd only be around two times the expected move. So basically, it's around, give or take, it's around $100 for a $100 put, and it's $100 for an $800 call. Basically, it's actually more than $100. So you can't, if you've got $100 in here to waste that you just wanted to play something, you couldn't even get a weekly call 10 times the expected move in here. That's what's great. And there's not even that much call skew. You would think that if you see all that volume, you go, oh my gosh, there's tons of call skew. There's really not. It's only around $3. So that's what's interesting. And 300 calls, they had 20,000 volume today on the contracts. And other than that, the 800s took the cake. So, I mean, you would expect to see, okay, I'm going to see more call skew in here. I'm going to see 400, 450, 500, 350. No, 800. So that kind of goes to show just kind of what's going on in here. I'm not going to say I'm bullish or bearish. I definitely want to see some volatility in here. I want to see volatility increase just because I think it's fun. And obviously there's some money to be made in here. But yeah, if that doesn't kind of tip you off to what this stock is all about, the 18,000 shares, contracts at the 800 traded today for the weeklies 3 days out. Yeah. Anyway, again, just to reiterate, 200, 300, we have to see basically, are we going to be above 300 or under 200 tomorrow? That's the big question. We're not going to be anywhere in between. Sorry, that's not going to happen. I don't think premium is going to get sucked out that much in here. If we expect a chop, it's going to be a huge chop between 200 and 300 in here. Yeah, again, everybody stay safe in here. Wait to see if the technicals kind of affect anything, and just kind of follow the hype and be safe. All right, guys, thanks for watching. Make sure to check us out on our social media. We have attached the links to our socials in the description. We also have a swing trading service if you're interested. There's more information in the description below.